You can hear me loud and clear, right? Okay, so we're going to be starting right away. This is going to be the course outline. This is going to be the table of content for lecture one. Table of content for lecture one. So let's get into it. What is Forex? What is Forex? Forex simply means foreign exchange. Forex simply means foreign exchange. And I've simplified it in such a way that to make people understand better. And that is simply the exchange of one currency for another, as in the buying and selling of one currency against another. If you notice in this market, you see when you are looking at the pairs in the market, you notice it's always in two. It's like USD, JPY, GBP, USD. It always comes in pair. That means if you are clicking buy on GBP USD, that means you are buying GBP and at the same time you are selling USD. So it is the exchange of one currency for another. The exchange of one currency for another. But in this Forex market, just like what the abokis you see out there, what they do, you see them on street corners, you see them, signaling to you to bring your dollar so that they can exchange for Naira. It's simply what we do. But why this one is so different is just that you are not staying on the street corners. You are not staying in the market corners. You are doing your home via some devices like your laptop, your phone, and what have you, your tab, your iPhone, and how you are doing it with the internet, and you are connecting to the stock exchange market right from wherever you are. So this is not another networking thing like MMM or what have you out there. This is real business, just that it has the flexibility that comes into it that allows you to come into the market from wherever you are, irrespective of where you are. So far you have your device and your internet, you are good to go. And this Forex market is the largest financial market in the whole world, the largest financial market. And that's why you see so many institutions coming into it. That's why you see hedge funds company coming into it. You see banks, I mean top banks across the world, Bank of America, HSBC, so many great institutions across the world. You see them coming into it. You see companies coming into it to come and trade and make their own money, just like we individuals too are coming into this Forex market to come and make our own money as well. So these institutions too are trooping in with millions of dollars to invest in this market and make good money out of it. And according to the statistics, this market is worth 5 to 7.7 trillion dollar on a daily basis. On a daily basis, I mean the inflow and the outflow from this market.
I'm waiting for him now. I better calm down, Jerry.
Is what 7.7 trillion dollar, like on a daily basis. And what is traded on the Forex market? The simple answer to that question is money. Money is being traded. Then the money now comes in different forms. You have the currency pairs, you have precious metals. That's where silver, gold comes into place. You can trade oil. Hope you know you can trade oil in this market. You can trade cryptocurrencies. You can trade stocks. You can trade CFDs. A lot of things. You can trade synthetic indices. It depends on what you want to trade. So you can trade a lot of things in this market, a lot of things. If you open your MetaTrader, you see different folders of what you can trade. Stocks of companies, just that the most the most common one that people trade is currencies. But you can trade a lot of things. That's where you see the likes of Crash and Boom, which is under synthetic indices. So many things out there that you can trade. So okay, like I said, the basic and number one commodity traded is currency. So who is a Forex broker? You know, we have different brokers out there, but let me just simplify who is a Forex broker to you. A Forex broker is a third-party company that gives me and you as an individual opportunity to also come into this market and participate alongside with the big boys, as in with these companies, with these banks in the market. This market on a normal day is not meant for people with low income, with little amount of money. But the broker, you know what they do? They come into this market, they collect your money, they collect my 500 US dollars, 50 US dollar from everybody like that. They now collect it together and present it into the market as a whole, so that by the time it comes in as a whole, it's going to be meaningful in the market. Because the people, just imagine a business that banks are into it. You know how many millions that bank can pump into the market at once. Government of countries are into it. Recently, I saw you know this guy, the Prime Minister of UK is into Forex as well. I saw a post on Instagram like that it trades gold as well. So, you know, people that has huge amount of money, they are coming into this market. Just imagine you now bringing $50, $100, $500 is nothing in this market. But the broker, they've been so good giving us opportunity to also come and make ends meet in this market. And you know, they collect money from everybody, collect it together and present it as a whole in this market. But doing that, they charge you commission for whatever they do. They charge you commission for whatever they do. If you notice, whenever you are placing a trade, immediately you place the trade, you see that the trade is on red. That means even before it goes into your direction and goes in profit, it will come on red. Then by the time you start making profit, it will turn to blue. That red is the charges from the broker. They charge you first, whether you are losing, whether you are winning the market. You pay the brokers first. You pay them first. And we have different brokers out there. We have different brokers depending on whatever you want to trade. But the two I'm so conversant with and that I've been dealing with for over the time, that is Alt Forex and deriv.com or binary.com. They are still the same. The binary actually rebranded into Deriv. They are the same. I think so far so good. They've been reliable and I don't have any issue dealing with them. So this now brings us, hope I'm not too fast for you. I believe I'm not too fast. If there's any question, just keep it for me. I'll attend to everything at the end of the day. So the Forex trading times and trading session. When you are trading currency, that's when we talk about Forex trading times and trading session. But when it comes to volatility, you can trade volatility like any time of the day. Volatility is like a simulation of the real market. The Forex, the currency market is the real market where emotions out there affect the market. That's why you see news affecting the real market. But when it comes to volatility, you know, when you wake up any time of the day, you trade, because it is a set of algorithm that some people has come to put together to, you know, to make it look like the real market, but it's not the real thing. The currency market is the real thing where you have emotional play, you know, affecting the market. So when you're talking about Forex trading times and trading sessions, we have the Tokyo session. We have the Asian session. We have the London session. We have the American session. And so far so good. I think the trading period actually favors us here in Nigeria, because we are almost at the same time with London, and London is one of the biggest markets we have out there. And London session opens like in the morning, like around the time we also are very active in the morning, the time we wake up in the morning, and closes by 5 p.m. Nigerian time, which is in favor of us. American session opens 2 p.m. Nigerian time and closes 10 p.m. in the night. While Asian session runs, I think, okay, there's an hour break after American session closes. Asian session opens 11 p.m. Nigerian time and run all through the night, all through the night. But where you can actually make money trading, what's it called? Where you can actually make money trading the currency, the trading currency is during London session and American session. These are the two largest sessions we have out there that you have a lot of volatility that so many people across the world, they trade during this session. And by the time we get to practicals and we get to MetaTrader 4, I will show you, you'll see the rate of volatility during London session and American session, and the low volatility in Asian session, because the participants are actually differs. When you have a lot of people coming into the market, you should expect liquidity in that market. You should expect a lot of volatility in that market. So you can take a screenshot before I move further. You can take a screenshot. So when it comes to the Forex market, there are terms, just like you have in any other career like medicine, engineering, there are terminologies, there are jargons that they make use of, that when you speak out there, people will know that, yeah, you are a bona fide, or you are, a well-learned person when it comes to Forex. So we have different terms we make use of in Forex, in Forex, or let me say in Forex as a whole. And the number one we are going to, there are so many terms out there, but for the sake of this class, it's going to be limited to, what I have before me here, and probably on your own, you are going to be making more research about the terms that we make use of in the Forex market. But the number one I have with me here is to go long. When you hear, I want to go long on GBP USD, I want to go long on NZD USD, I want to go long on GBP CHF, I want to go long on crash and boom. It simply means I want to buy. Hope you understand. It simply means I want to buy. I want to buy crash and boom. I want to buy crash. I want to buy boom. I want to buy volatility 75. That's what go long. That I want to long this market. It simply means buy. So don't let that cause a confusion to what you already know. It's just for you to, bear all this in mind, so that when you speak out there, just like when you hear a medical term and you're like, oh, this must be a medical practitioner. The same thing when people hear you speak sometimes, people will come to a conclusion that you must be a Forex professional out there. So that's the essence of all this. So another term, very, very common one too, is to go short. To go short is simply the opposite of go long. Short simply means sell. When you go short on the market, I want to short Euro USD. That means I want to sell Euro USD. I want to short crash. I want to short V75. Simply means I want to sell V75. That's what it simply means. So let's go further. When you hear bulls, what comes into your mind in Forex? When you hear bulls is actually referring to as the buyers. We refer to the buyers in the Forex market as the bulls. We refer to them as the bulls. And another one that is almost like the opposite of it is when you're talking about the bears. The bears, that means the sellers. If you hear something like, oh, the bears are in control of Euro USD, they are in control of the market, it simply means the market is going like this, the market is selling, the sellers are in control. That's what it simply means. So when they say a market is trending, when you have a trending market, that means the market is going in a particular direction. When the market is trending, that means the market is going in a particular direction. It can either be selling or buying. But what you should just have in mind is when you hear, oh, this market is a trending market. Hope you are taking note of all this. When you hear this market is a trending market, it actually means the market is moving in a particular direction. Maybe it's going or it's going, it's going up or it's going down. Trending is used to either say the market is going up or it's going down. So moving to the next one, a ranging market. I'm going to be showing you all these ones when we get to practicals. I'm going to be showing you what a ranging market is, what a trending market is. I'm going to be showing you everything, but we're just laying a very good background for us to build something on. So when we say we have a ranging market, that means the market is going sideways. And I want you to bear in mind that in the forex market, we only have three outcomes. The market does three things. That is either the market is going up, going down, or moving sideways. Is either the market is going up, going down, or moving sideways. That's what we have in the forex market. So we only have three moves: up move, down move, sideways move. And when the market is going sideways, we say the market is consolidating or the market is ranging. So another name for ranging market is consolidation. When you hear the market is consolidating, I believe you are taking note of all this. You are going to give me a summary. You are going to give me a recap. I can just decide to, close my slide and ask you any question at the end of the class. I can decide to ask any question from any part at the end of the class. So please pay attention to all this. So that's a ranging market. Like I said, it moves sideways. A ranging market moves sideways. And you can also call a ranging market a consolidation. A ranging market is you can also call it a consolidation. So we have forms of trading. And the most important tool is a fundamental analysis and technical analysis. That's forms of trading. When you're talking about you want to trade, you have fundamental analysis, we have technical analysis. There's also another one that is not so common, and that is referred to as a sentimental analysis. But for the sake of this class, we are going to be concentrating on fundamental analysis and technical analysis. So let me start with fundamental analysis first. Fundamental analysis simply involves anything around you in your society, in the, anything around you, maybe your social, political, economy, your any religious situation, everything happening around you that has a direct effect on the economy of the nation. That's what fundamental analysis is all about. That's why you see, that's where the issue of news comes in. Like, let me give you a recent example. If Afghanistan's currency is on the forex market, they've been into war for several years. They've been, a lot of trouble in that country for several years. In the forex market, their currency will be very weak in the forex market because, just imagine a country that is unstable for several years. Do you think anybody would want to invest in such country? No. Such country is not going to, attract foreign investors. Even Nigeria that has not really been in war, that we've been experiencing some kind of instability in our economy. We have Boko Haram, we have all sorts. We have all sorts happening in Nigeria. If the naira in the forex market is even very weak, that's why you see the exchange rate now. Dollar is now 515 to $1. So if there is problem in a particular country, the currency, the economy won't gain strength. The economy will be weak. The currency won't have value. It will drop in value. And that's where fundamental analysis comes in. If you know, there is an issue in a particular country, you can use it to make a decision, make an informed decision in this market. You can use it to make an informed decision in this market, and in making a decision whether you want to buy or you want to sell. Look at when the issue of coronavirus broke out in the US last year. US dollars was very weak because the economy of the country was down at that moment. US dollars was weak. So if you are taking a trade like GBP USD, and if GBP is strong while US dollar is weak, then it will be advisable for you to buy because GBP is strong while USD is weak. But if you have a situation whereby the USD is weak and you are selling, USD is strong and you have GBP USD and you are selling, that means it will pull the weight and it will be advisable for you to sell at that very point in time. It will be advisable for you to sell. So whenever there is any crisis in any nation, it affects the currency in the Forex market. It affects their currency in the Forex market. And if you realize there's a particular news, very important, very, very common among Forex traders, it is called NFP, which comes out every first Friday of every month. You see, that's why many traders wait for that news to break out in the United States of America, and they see whether the news is in favor of US dollars or against US dollars, and they use it to make an informed decision whether to quickly buy or to quickly sell. So when we get to all that, I'll actually show you. So that's what fundamental analysis is all about. Everything around your society, everything around you that has a direct influence on the nation's economy or currency. So now we are on technical analysis, which is the most important, because technical analysis, that's where you make your analysis using all kinds of tools. That's where you make your analysis using your horizontal lines, using your vertical lines, using your trend lines, using your Fibonacci tool, making use of indicators, although I don't advise indicator. The way I'm going to train you in order to trade is without a single indicator. Then if you now want to use an indicator, you can use it to confirm whatever you have seen without an indicator. I'm going to be training you on how to trade without a single indicator, and the type of trading is called a naked charting or price action. So technical analysis is the art of using previous data to actually predict or to make an informed decision about the future. For instance, if you know that price has reacted at a particular point, like at a particular point in the past, when price is returning to that to that point in the recent times, there is high probability that what happened in the past is still going to repeat itself. There is very high probability, but it's not that it will just automatically unfold. Sure, you get, because everything we deal with in the Forex market is all about probability. Is either it happens or not. So there is not that maybe there is a holy grail anywhere. So we approach the market with a very open mind. We approach the market with a very open mind, so that you don't just go with a closed mind that, okay, because it happened like this in the past and it must happen like this when price is approaching that same point in this present time. No, we approach the market in a very open manner and we are disposed to whatever happens. So now, we are going to be looking at these are I think this the last topic in the lecture one. This one. Oh,